Hello and welcome back to Bunnex Investment Group. So today we are going to talk about a very simple strategy anyone can apply, whether you are a pro or you are a novice. So basically you are going to start off on the daily time frame, whereby you are going to be looking for break of structure. We are going to be implementing the simplest price action principle, no indicator needed, but just candlesticks, a naked chart without any clutterness. So the first thing is actually to see break of market structure. So what is basically that? Break of market structure is breaking of the last lower high or lower low within a market flow. As you can see at this point, we had equal highs, meaning that it was almost termination of the current trend that was going in the upward direction. However, the last lower low in this particular trajectory was this one, where we had this low, right? This is the exact low that we broke when we had this shift candle. It was actually a very fast moving shift candle. So within that break of structure, we actually now look for an opposite bias. That is, in this case, we are now looking for shorts or sells. So these sells or shorts are now done using the principle of break and retest. So for those who do not know break and retest concept, it's basically a concept whereby we are saying the market has broken the last point of psychology, right? In this case, it was this point, and then we have broken it at this zone with this impulsive drop, and then we are looking to see a retest. So this retest is the one that is going to give us our point of market interest. So we call this retest our point of market interest, and is only traded when we are on the H1 time frame. So let's now go back on the daily time frame. So in this case, we are saying the market actually broke at this point, whilst the first thing was actually to break structure to signify change of market bias. So these are the points of market interest where we are looking to see the market come and retest to give us an entry point. Since we haven't broken structure to the upside, we're still looking for sales. So this was another point where we actually broke. We can see that we made this zone, and we are actually taking the candlestick bodies in consideration. We broke, then we came back again to this zone. So if we go on the smaller time frame, which is the H1 time frame, we are to look for double tops or double bottoms, depending on the market context, so that we actually make our entry. So the double tops or double bottoms should have two legs, distinct legs, in two different sessions for us to validate them. So going on the H1 time frame, this is what we will see. We can see the first point that we have marked on the charts. We had this beautiful double top pattern, right? We had first leg in this particular session, and then the second leg. And this second leg, that is where we look to get in after a candlestick reversal pattern. In this case, we can actually now go to the shorter, lower time frame, which is the M15 time frame, to look for a proper entry point within the zone of actually within the point of market interest. Let's actually see if we haven't go further from our last period, which is the first one. We're supposed to go back to see the exact point of market reversal, or the exact point of interest. So we've said go on the daily time frame. After the daily time frame, we go on the this daily time frame first, then H1 time frame later. It's unfortunate that I'm scrolling back on the H1 time frame on a chart that we have marked on the daily time frame, and that brings us to another very important concept as well, that these patterns are actually seen on the H1 time frame. However, the markup is going to be done on the daily time frame. How am I going to wait for all this time? So that is where you start to apply a large gross watch list. We start with a gross watch list, which will narrow down to become a net watch list. So a gross watch list, in my case, trading such a particular strategy will require you to have several pairs to look at. Look for market structure, for break of market structure on the daily time frame. Look for retest of key points on the lower time frames and find these double tops. In this case, we had this first leg on this particular session, a gap, and then the second leg. So this is where we're going to make our entry. So you need to first backtest before you apply on real markets. Have at least several markups for you to actually be able to mark these double tops and double bottoms without subjectivity. On that note, we come to the end of this video. See you on the next one.